Hey, what if I told you that four of the biggest companies on the planet are about to spend $710 billion and one stock is positioned to collect a massive chunk of that cash? Yeah, you heard that right. $710 billion. That's not the GDP of a small country. Well, actually, it kind of is, but in this case, it's the combined AI capital expenditure commitments from the big four hyperscalers, Microsoft, Amazon, Google, and Meta. These four tech titans are essentially writing blank checks to build out the infrastructure powering the next generation of artificial intelligence, and the race is very, very real. Now here's the thing that makes this story so fascinating. When gold rush fever hits, you don't necessarily want to be the miner. You want to be the person selling the pickaxes. And right now, there is one company that has quietly positioned itself as the ultimate pickaxe seller in this AI gold rush, and investors are starting to pay very close attention. So let's break down what's actually happening here. Microsoft, Amazon Web Services, Google Cloud, and Meta are all locked in an arms race to build the most powerful AI infrastructure on Earth. We're talking about massive data centers, custom silicon chips, cooling systems, networking hardware, and the enormous amounts of electricity needed to keep all of it running. Every time one of them announces a new AI model or a new cloud service, they need more hardware, more servers, and more specialized components to make it all work. And who benefits the most from all of that spending? The analysts at 24/7 Wall Street point to Nvidia as the single biggest winner in this entire equation. Now look, Nvidia isn't exactly a secret at this point. The stock has had a legendary run, but what this story highlights is just how structural and durable that advantage really is. These hyperscalers aren't buying Nvidia's GPUs for a one-time project. They're buying them by the hundreds of thousands, building entire data centers around them, and then planning to do it again next year, and the year after that. Think about it this way. When Meta says it's going to spend $65 billion on AI infrastructure this year alone, a significant portion of that money flows directly to GPU purchases. Same story with Microsoft, which has committed to $80 billion in data center investment. Amazon and Google are right there too, with similar 9- and 10-figure commitments. Add it all up and you get that staggering $710 billion figure, and Nvidia sits at the center of almost every one of those transactions. What's especially interesting is that even as competitors like AMD and Intel try to chip away, no pun intended, at Nvidia's dominance, the hyperscalers keep coming back for more H100s, more H200s, and soon, the next generation Blackwell architecture chips. The switching costs are enormous because these companies have built their entire AI workflows and software ecosystems around Nvidia's CUDA platform. That's a moat that doesn't disappear overnight. Now, is Nvidia the only way to play this theme? Not necessarily. There are infrastructure plays, power companies, cooling technology firms, and data center REITs that all benefit from this massive spending wave. But if you're looking for the single stock that captures the broadest and most direct exposure to that $710 billion commitment, the evidence keeps pointing back to the same name. The bottom line is this: the big four aren't spending this kind of money because AI is a trend they want to experiment with. They're spending it because they genuinely believe AI is the foundation of every business decision they'll make for the next decade. So the real question isn't whether Nvidia profits from all of this spending, it's whether we've actually seen anything yet.